All right, let's hit it. Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 26th. Michael Boutros with you on the horn. Good morning to everyone in the room. Steve, Ted, Agnes, great to see you guys all here. So we've got a list to go over, but I want to say a moment of caution. So the dollar's up and away, right? Flying high, breaking through resistance. This is a very tricky time, guys, where retail will tend to start chasing. I just want to put a cautionary note that we are heading into the last 4 days of the month with an apparent breakout, which is, manifested across a lot of different trades, but be careful chasing here. If you're not in some of the trades we're going to talk about today already, I just want to caution you against chasing. This is the exact environment where I've seen retail all those years on the trade desk just get slaughtered. So with that note, we did just get the release of durable good orders in the United States coming in at 0.8%, slightly weaker than the anticipated print. Just take a quick look at near-term price action here. Again, the top side is pretty spent. So let's jump right in, guys. Here's DXY on the weekly charts. I showed you guys this yesterday. We're at the high week close from 2020. That's 101.94. It's the exact level we talked about yesterday in the webinar. From a weekly standpoint, this is important. Okay, this is really important. You're in overbought condition on the weekly standpoint, well above 70. You've broken uptrend resistance, and if this break is legit, this follow through could have a lot more to go. But first things first, this is your first hurdle that you need to pay some attention to. And if the speed of the move, the momentum of the move, the inertia of the move starts to wane, this is where we start getting a little dicey. Here's what it looks like on the daily charts. Again, topside breach of uptrend resistance did close above yesterday. Here's a basic channel off the lows from February, parallel, resistance. What are we doing here? What are we doing here? So it's a good time to be a little bit more reserved. If you're holding long dollar exposure, a good area to start to a little bit tone down, if not bring back your protective stops. Big area of resistance. Like I said, I don't even have anything mapped up on the daily chart beyond that. You'd have to go to the weekly chart. 103 is essentially going to be the 2016 high close, followed by the actual 2016 high, which gives you 103.80. But there's a lot of room if this breaches, okay? Is it worth? It may be worth, if you have something on, to leave a little on the table. I'm always an advocate of leaving a little on there to run, but expectations are curbed, right? And understanding that you are in a mature advance at this point. All right, it's gonna be the fifth consecutive day or fourth consecutive day up. Here's what it looks like on the intraday chart, right? Not too alarming yet, but here's been a one straight shot from the weekly open, right? And if you look at it, momentum waning, yes, not a reason to get bearish, but definitely not a reason to continue chasing or take any new long dollar exposure from this region at this point. All right. There's not much on the scalp to really get crazy about. Here's your weekly open support. Just keep that in mind. If we start to crash below that, maybe you start to look for a little bit more of a setback towards trend support. But at the end of the day, man, it's a strong trend. Not really. I'm on the sidelines with the major dollar crosses. Now, some of the com currencies we went over in last night's update, I'm going to go over. I love those. But for the dollar, for the euro, and for sterling, it's all the same case. Here's what euro dollar looks like on the weekly chart. I'll be putting out a piece on Daily FX. Guys, this is the level we talked about yesterday. 106.58, 106.97 is absolutely critical. It's the same exact trade, right? Euros into downtrend support. Another rendition of that slope, downtrend support. The 2020 low close, 106.97. And that March 2017 high week reversal close, again, mouthful there, but a decent pivot zone, gives you that 106.58 level. So watch what happens here today, okay? This is the weekly chart. So nothing matters until we get a weekly close below. But boy, oh boy, if that breaks, there's nothing to 105.30. It's the 2017 low week close. So it's very important. pay attention here. Hey, Marcin, can we have a look at Euro? Okay, got a whole list if you have time. Yeah, I'll try to get through it. You know, Marcin, I have a list right here with your name on it for Aussie CAD, Sterling CAD, Euro, Yen, CAD Swiss, all of these Swiss pairs. I've been tracking some of them. A lot of those are runaway trades as well. I'm more interested in structure trades that have a lot more technical structure in them, but we'll take a look if there's time, no worries. So Euro's at support, guys, okay? Here we are again on the daily chart, doesn't show as apparent, right? The levels are a little bit wider here, but 106.37, the bottom end of that range. There's an 88.6 retracement just lower into 106. So I have these listed here on the daily charts as sort of integer targets on the way down. Here's what the scalp looks like for Euro. Again, I haven't been getting involved in this. This is just for your reference, not involved in the Euro at this point, but there are the levels, 106.37 on the way down from here and 106. You can see even the near-term structure. This is the same structure we've been following, right? We're there. We're there. We're buckling below that 25% parallel. If this is legit, these are your next two targets on the downside, but it's just tough. It's tough if you're not already involved here to try to do something on Euro. Base case scenario, to take a step back from a trading standpoint, sitting on the desk, we're actually looking for a low, right? We're looking for an exhaustion low somewhere in the range of that 106.37, you know, max 106 if we get a drawdown here in Euro. Questions? Last but not least, before we jump into last night's update, I haven't given you an update on Sterling in a while, although we've been talking about it here in the webinar. This thing, you know, the break below 130 was just phenomenal. It's been a straight shot to hell since. Two levels that we've been talking about at length was 127.54, okay? On the weekly chart, that was the 2018 low week close, the 2019 yearly open. Really nice pivot in price. The second level was two equal legs off the high, 1, 2, 3. That's 126.59. Looks like we're up, knocking on the door there. So for Sterling exposure, that's the level I want to see some sort of inflection off of. Okay, here's what it looks like on the daily chart. You can see the magnitude of the decline is remarkable. Okay, given where Sterling has been since the beginning of the year and the kind of contracted last couple of months, a break of the monthly opening range low clearly dictated the move. Again, initial targets, secondary targets at 27.50. I already removed it off here. Here's the last one at 26.59. Okay, looking for a reaction there today. Here's what it looks like on the intraday chart. Again, your weekly open comes right in line with the 50% retracements. That's 28.30. I don't want to see anything above this if we're heading lower. And 26.59 is going to be the immediate focus that we're looking at in today's trade. Again, you're getting divergence. You see, I have RSI on all of these. You're getting divergence on all of these, but that's not the reason to start fading the move. Levels come first level on tap, 26.60, 26.59, right below where we are now. Questions on British pound. So you find yourself in a scenario where the dollar runaway story is really mostly kind of categorized here in what's been going on with Euro, Sterling plunging, all heading towards major long-term targets. See what happens as we get through trade today. All right, let's jump into last night's update. Thai, NASDAQ, I got you. S&P, I got you. Gold, I got you. Silver, I got you. Crude, I'll add. Again, you love the crude trade, huh? And the 10-year. So before we even move into the Aussie, I'll show you the 10-year. It is pulling back, and the level that we talked about, we have continued to kind of eye as resistance. 292. Obviously, there's been a little bit of a fluff job there. He did close above it one day, but here's the pullback. Not surprising, right? And I'm waiting. That's one of the reasons, again, the dollar rally at the point where we are right now needs a breather, you know? Needs a breather. Might be the smart money moving first here. So nothing new to add. A basic 236 tie is 254. So even if you're just going to make the most mildest of retracements, you're going to match the high that you made here early in the March or late in the March rally. That's near 254. All right. And again, obviously the 10-2 spread, everyone's going to be on the, ever since this dipped into negative territory, I just like showing it because it's funny to watch the fundy guys react and freak out every time this moves. But recession, I don't think you need this to kind of foresee that we are heading towards definitely some sort of economic slowdown, if not a full-on recession. But there it is. You know, we've dipped into negative territory, rebounded. This is a daily chart, guys. So you can see for the last couple of days, we're back on the defensive again. We'll continue to look at that. Ty is saying the Euro banking system in bankruptcy. I mean, the European, I think we haven't even seen the actual effects yet that the, you know, the travesty in Ukraine is going to actually wreak on the European economies. I think we're in the infancy of this thing, unfortunately. Not to be doom and gloom, but objectivity is key in this, right? Nothing's rosy and rainbows. We look at things as they are. So with that said, let's jump into last night's update on the Aussie dollar. So I've been loving this trade since the start of the week. We dropped into a perfect 100% extension, downtrend support, looked like really nice divergence yesterday, got some really nice intraday candles that suggested, whoa, we're into pretty big support here, possibly looking for a bit of a rebound. Here's what Aussie looks like first on the weekly charts. From this chart, it's like X disaster. Oh my goodness, right? We talked about the 73.96 break. That was massive. The 52-week moving average, fib, uptrend support, downtrend support, the whole 9 yards gave way, and we're kind of in free fall here. Now, while below 72.70, which is the objective yearly open, the threat is still lower. Broadly speaking, from the weekly chart, doesn't mean we're going to have to do a straight shot to hell, right? It's still going to be some back and forth. So where does that leave us on the daily chart? Can I have the weekly and hourly on the 10-year picture? So I don't have anything on the I don't have anything for you on, this is the daily. I don't have anything for you on the intraday for your yields. I haven't really been tracking that as closely, although now that you bring this up, sorry guys, just keep an eye on that. Keep an eye on that slope there. And then you want the weekly? Here's the weekly. All right. Can you start doing it? So Ty, it's all about the technical structure. If you bring my attention to it, I'm more than happy to oblige. Absolutely. Hey man, I always say I'll trade seashells if it's a widely traded market with volume and clear-cut directional path. The technicals yield away always. All right, back to Aussie. So again, Aussie from the weekly, big trouble below 72.70. Here's what Aussie looks like on the daily chart. So we talked about it yesterday, 71.40, just below that, 71.31 is the 764 retracement. Kind of liberal with the slopes here, right? But you had some play there. Like I said, the intraday directional play into that drop was really the tell, right? And last night, I really just wanted to highlight that drop capitulated. You saw a divergence into it, and a near-term breakout suggested we look for a little bit of a recovery towards 72.30s, let's call it. That's the former 618 right here. So you can see we rallied really nice in overnight trade and faltered just ahead of that zone. Here's the same chart, same time frame, where we were and where we are now. So we rallied just shy of that. I hope some of you caught an entry or at least caught an exit on that. If you're still in the trade, it's not like done per se, but we still could get some more gyrations. We're just in Tuesday trade. We're opening up the weekly opening range. You're sitting at support. So anything sub 71.40, guys, is still basically terminal because you're looking at a break of downtrend support, right? 70.86 and a straight shot into the 70 handle is what I would expect if we falter at this low. Near term, again, weekly open resistance doesn't even come into 72.50. So, I still think you possibly could get some pump on this. At the end of the day, the burst from last night's low, that was kind of the idea for the setup. So don't get too married to trying to counter trend trade. Remember, the dollar is still in a rage mode. But I do think we could possibly get some more lift on this. You have Australia inflation data later tonight. They're expecting the headline inflation rate for the first quarter to come in at 4.6%. All right, that's up from like 3.5. So with that in mind, you got to kind of take a side seat here. If you're not an Aussie already, hopefully you get a little bit of a kick heading into the inflation rate there. Otherwise, we're pretty much clear to the end of the week as far as economic data is concerned. You do get US core PCE, the personal consumption expenditure, as I always say, the Fed's preferred inflationary gauge. That's on Friday, right into the close of the month. So keep some powder dry. Questions on Aussie? All right, so it was a corollary play. Kiwi was doing pretty much the same exact thing. I gave you the full suite for Kiwi because we kind of wanted to give a runaround. We haven't looked at this in a while. Here's what the Kiwi looks like on the weekly chart. Same scenario, broke big support, kind of shattering the way back lower again. The lows of the year come in at 65.38, excuse me. There's really nothing to look at the weekly chart beyond that, okay? You're still bearish sub 67.33. So what does that show us on the daily chart? Well, here's where things get a little bit clearer. You got support at a basic 88.6 retracement. Again, a little liberal with the slope, but you know, if you take that channel, you're basically riding it all the way into those lows. Again, these are the swing lows that you made in the February trade. Here's the 88.6, 65.86. We talked about that yesterday as well. Intraday, well, looked like it was looking just for a little bit of a recovery of a low right off that 88.6. Again, trend support. Weekly opening range panning out pretty good. If you get the top side break, sure, maybe get a little bit more of a pop. Didn't get the pop that you got in Aussie, but you are basically setting up a really nice weekly opening range, again, right above support. I don't think this one is, let me take a step back. The lateral level of support that we're sitting at here, I don't think is as significant as Australia, or as the Aussie dollar rather. If the Aussie dollar breaks, I think that's going to be the sharper play lower. But I think that's the more significant one. So just wanted to highlight both of them coming off support. You're getting a little bit of a bounce, a little bit lesser of a bounce here in Kiwi, but the support structure is none the same. Okay, break lower from here, you're basically 65.30s. That's a huge zone, and then back into 64.80. You're still bearish below 67.33. Questions on Kiwi dollar? All right. Oh, silver. Oh, dollar CAD. Number 1, 2, 3, 4, 5. Here's number 6. So dollar CAD also, I just wanted to cover the whole suite of the com block yesterday. Really nice breakout of downtrend resistance. You saw that rally in overnight trade. I was looking to fade the drop, right? I was telling you guys to look for a drop to buy again. We didn't quite even make it to the median line. I had an alert, I think, at 26.75, which is what I told you guys. Never actually hit, excuse me. So didn't get involved in this one, unfortunately, but here it is, okay, ripping higher. The big level of resistance that we were talking about is still on tap. First, it's 28 basically, 27.94 into 28.13, a nice zone here. But the bigger one is up here. It's the objective yearly high day close. Again, not Mike Boutros' opinion, not Jamie's opinion, fact. And it's going to be the objective 1618 extension of the advance off the yearly lows. So really nice zone there on uptrend resistance. If we breach, first level of resistance we're looking at is right into 128 though. Watch this zone. Again, don't take my word for it. Here's the January highs. Here's the highs from February. This is a spike high that we made in February, closed well below. All of that comes in this zone first up on dollar CAD. Bullish invalidation, no change. 26.34. 26.34. Let me take a step back. If we make a new high, you want to lift up the retracement, right? Obviously, it's the new high that we make, but in and of itself, 26.40 is the objective yearly open. Again, fact, all factual levels that we respect in and of themselves, irrespective of any subjective type of analysis, okay? All right, quick move on Looney there. There's not really much to write home about. The dollar CAD rally is really just testing major resistance. I'm going backwards here, but this is because I've been showing you this chart for months, 2750 all the way into 2814. This is death zone, right? Here's the closes. So if we break 2814 on a weekly close basis, what's that going to be, guys? A breach of the yearly opening range highs. And that would put you looking for a third, fourth quarter high in dollar CAD. All right. So big implications here. Again, big resistance here, just higher. That's number 6. Number 7, Ty, here's silver. And then I'm going a little backwards here. I'll hit gold as well. But I did give you an update on silver last night because I think we're at a big zone. And if this support breaks, you're going to likely see a big spill lower. It's a big support zone between 23.24, okay, and 23.53. It's this zone that we're sitting in right now. Ty, I showed you this yesterday. It's still important, man. It's still important. My favorite Fibonacci confluence is a 618 retracement off the high, a 100% extension off, 618 retracement off the low, a 100% extension off the high, the objective yearly open, okay? All levels of reference that have no subjectivity to it whatsoever, we're there now. What do you want to do? Right? If we break and buckle below, like I said, this is going to be likely a washout trade, 2260, maybe even 2180s. But this is absolutely critical. If we look at that in the near-term chart, here's the thing I showed you yesterday, Ty. No change. No change. Here's the weekly open, dropped right into support. You're looking for a breakout of this immediate zone for guidance. Weekly open resistance at 2409, key support into 2325. Questions? This is big. This is big. Now, go again. I mean, I might as well just go into the gold trade. Here's so anyway, no change to any of those levels from yesterday, right, Ty? Right on point. I don't have anything on the weekly for silver that I track. Too importantly, yeah, it's same thing. 618 retracement, yearly open. This is just big resistance. One thing that does point out here on the weekly chart is last week's outside reversal candle, an extremely bearish formation when it happens near the highs. And for me, that puts the bearish tone into this week. Nothing supersedes basic support and resistance, Ty. Look for pivot along this level this week. All right, this week. That's big. So if we take a corollary, again, go sideways, here's gold. It's the same sort of thing, although gold is tempting the bigger break here. Here was the last update on gold. Right here, okay? So we're talking about the outside reversal candle early in the week. This was, again, right into the Sunday open. And we talked about the fact that that's pretty bearish. You're looking lower. You're looking for a drive into key support. Here's key support on the weekly chart. Watch the closes with respect to 1903, which is the high close from last year. Daily chart looked like this. Okay. Sideways, there's the 618 of the near-term advance from last month's low, 1931. If that breaks, look at 1918, and that's really the pivot that would be the onslaught for the drop. It's exactly what happened. 1918 pivot, onslaught of the drop, right into the 618 retracement. That's 1891. So where do we go from here? Well, silver's doing the same thing. Silver's at the confluence 618 and 100 off the high. The 100 off the high here goes a lot lower actually. So let me just show it to you. It's this. So it's not going to be necessarily something that's in concert right now, but we should have it on the chart nonetheless. Actually, let me see where the 618 is also. Woof! It's right there as well. Right there, 1886. You see that? All right, I'm not going to leave it there, but you get the point. So what do we do from here? Well, if the break is legit, rallies should be capped by 1918, max 1930, because we're still in that range. But you're essentially looking for former support to be resistance if we're going to drive lower. okay? What's the impetus for the drive lower? A lot of people are asking. Why? You still have a raging war in Ukraine. You still have inflation going through the roof, right? And in the inflationary hedge is one of the primary functions and tools of gold, historically speaking. So why isn't gold catching the bid? You know, I don't try to rationalize, guys, the reasoning of the fundies of why this move is legit. It's broken support. It's broken the monthly opening range. Rates are higher. Not only are rates seen higher, if you guys have checked out the CME interest tool, interest rate, the Fed Watch tool, it's going nuts. It's going berserk. People are starting to call for 75 basis points every single hike. It's just starting to build and build and build. Real rates are skyrocketing, absolutely. There's a whole bunch of things we can talk about with that. You know, here's the Fed Watch tool, guys, just to put you where we are. You know, this is 100% for May. Oh, what are we in? We're going to get to December. So the majority see us between 275 and 3 by December. So as interest rate expectations continues to build, that's going to be a hindrance on gold, which does not offer a yield, right? There's no rate. So there's an argument to be made if you need to rationalize the fundies. At the end of the day, a break of support is a break of support. Here's what it looks like on the intraday chart. Still pretty clean. No change to any of those levels from back, earlier into the start of the week. Here's the start of the week. It was just a straight shot down, and here we are. 1891, 1894. It's the opening range low for the week now. Near-term support. Resistance is back at 1918, like I said. Bullish inval 1931. If we clear the weekly open, you have to make some sort of assumption that a low is in. Not my favorite scenario, but that's the if-then statement. Weakness below from here, you're looking for 1877. That's going to be a major pivot in price and some major highs that we've made from last year. Okay, questions on gold. Watch this one into the close of the week. We'll revisit this again on Thursday when we speak. But you're at a major pivot, just like silver. Just like silver. That's number 8. All right, number 9. It's a quick step back to the FX block. Aussie Kiwi was a level. I mean, this wasn't actually a massive trade setup, but it was something I wanted to highlight for you earlier in the week because it was just at a major resistance level. Someone here had talked about it, and it came into play right into the start of the week. So 110 essentially is what you're looking at on the weekly charts. We had something mapped out there as far as the 110 region and Aussie Kiwi. Big level of resistance. It basically just matches up with the highs that you made back on the 2017 advance. It was a reversal close here right next to the highs. The 2015 basic trend line also came in right to that level. Momentum looked like it was turning over. Just a beautiful, exhaustive trade. Remember, this is also last year's highs, right? I never actually put the yearly open for this year, but you get the picture. So we couldn't even make a close above last year's high. And when we closed last week's candle, to me, that was the quintessential exhaustion trade. So we fast forward into the daily chart. You had a really nice outside candle here, almost as a pin bar, almost like kind of hammer. Again, inverted, really looking very bearish. You're trading against 109.70, which was the high day close for 2020. And so we were just looking for the pullback, right? Again, we had all the hallmarks and momentum as well, divergence right into the high. So all I wanted to highlight, and I even pointed this out yesterday, 108.30 hit. Okay, that's the 2019 high day close. We're kind of bobbling off that now. Today's high failed right at the median line again. I don't know if I'd operate off it yet, but it's certainly encouraging. Even if we get one swing higher, I don't think I want anything above 109 if this is heading lower. Okay, here's a quick retracement of the move we just made. The 38.2 comes in right here. It comes in right here, right? So 108.90, maybe 109 max. Now you're talking about, again, Kiwi strength, right? Or at least out of the two, Kiwi strengthening more out of the two for a move lower. But even from a wave count, 1, 2, 3, 4, maybe one more 5 to give us the proper Elliott conditions for a move lower? We'll see. As it stands right now, I'm looking for topside exhaustion ahead of 109 in Aussie Kiwi. Okay. 2 hour, Ty, daily, weekly. No change to any of the levels from the update. So if you stick with that update from Sunday, all the levels are exactly the same. All right. Sterling Swiss, you know, Marcin, you got me on these trades, and then I can't stop folding. I can't stop finding or following them. Sterling Swiss is one of those trades where it completely washed out. We loved, if you guys remember, we talked about 102.90 as being big support. Yearly range lows, you got the lows from November of last year. Uptrend support, yada, yada, yada. The rally, you know, failed right ahead of key resistance, downtrend resistance, the 52-week moving average, and then we pin barred that and pulled right back to close below the 618 last week. Super bearish. So the rally was great. The way the week closed was like super bearish. Now it's turning over completely. So here's the daily chart. There was the rally. It seemed like a decent breakout. 618 resistance. Boom. Breakdown. Again on Monday, breakdown. Here's today's trade, breakdown. Like we've completely invalidated this as a false break of downtrend resistance. Now you're looking for a drop towards the objective monthly open, the objective 2021 lows. It's 121. What are you gonna do? There's nothing till we get there. Here's the apparent uptrend we were following. Remember this? Hey, if this is gonna hold, we kind of want support off one of these two levels. Yeah, that didn't work. Right through. Here's the pullback and even whipsaw. So this slope is null and void, and now you're kind of dealing with the aftermath, but it looks like a full-on breakdown, Marcin. I wouldn't do anything until we get clear-cut directive path off 103 or 102, 120.90, excuse me, this region here. So neutral on that. Neutral on that one. It was a decent play to the upside. And even if you caught some sort of reversal, if you're holding anything here, I think, you know, you're just bringing your stop down. I really wouldn't be worried till we get to that 102, 120.90. But an interesting setup nonetheless. That is number 10. Number 11, here we go. Ty, get your pencils out. We're going through the equity indice block. So equities have just been, you know, stellar. The levels have been clean. Yesterday we talked about the fact that we're coming into some big support. Is basically 4,200, 41.97 being the 236 that's on the weekly chart, and we said watch for support early in the week, right? 41.97. The low we registered yesterday, 42.01. All right, so big support. Looking for that rally to fizzle out. We're not out of the woods yet, but we still could get some more upside. Here's SPX on the daily charts. I know it's getting a little messy here, but the levels just insane. 42.19 was the 786 uptrend support. We talked about this just being a 2-touch, turned out to be a 3-touch. Here's the recovery. So you would expect former support at 618, we broke right through it, resistance. That's acting as resistance right now. You can't allot that that's going to cap it. You know what I mean? You still could get a little bit more of a test higher and then the resumptive move. But at the end of the day, that's basically where we are in trend, right? Boom, maybe a little bit higher. Still thinking we get a bigger break. But right now, you can't discount the recovery. Here's what it looks like on the 2-hour, a little bit more clarity as we zoom out to the 4-hour. Okay, so this is where things, again, in time, in price, go right back to the beginning of the webinar, guys, the warning I gave you. This is where things get churned, right? FX gets churned right here, or retail rather, gets churned. So clear-cut resistance was perfect, 43.09. So the rally off yesterday's low, boom. Here we are at the median line. If you want to get super granular, okay, and this is just, you know, for the scalpers out there, like 42.40 max, even on an intraday spike, you're looking for another high, and ultimately I'd like to fade that high. So it's either a rally towards 43.70, you know, I don't think you get as high as 44, but both levels of interest for possible exhaustion, a downside break, and you're looking for the drop towards 41.17 and below. So I don't like to get too granular like that because I don't want you guys kind of staring at the 5-minute charts, but that's kind of the idea here for SPX. Don't discount that we could see a little, still a blow off from the decline that we've recently underwent. Questions on SPX? All right, so no change again to any of those levels from yesterday. We simply dropped into that 786. We've tested this as resistance, and that's the focus range right now for the S&P 500. For NASDAQ, similar scenario. The weekly chart, we talked about some major levels that we were breaking through on the downside, yet you still had some levels to keep in mind. The low close was 13,301, and key support still down here. Basically into the 1300, 1294, 12,947, excuse me. My abbreviations sometimes, guys, if they're off, just give me a ping. So that's the NDX from the weekly charts. Here's what it looks like on the daily. Gap lower, actually below the median line. Looks like it's already retraced. So again, waning downside momentum. Right? They all look still bearish, but you know, at the moment, you can still envision that blow off giving you a little bit more back before the resumptive move lower. Here's what it looks like on the intraday chart. It's not as clean. It's the same pitchfork though that we've been following. Again, not as clean, right? But would suggest resistance at 13,878, 13,940. Bearish inval 14,420, no change there. Got to get through this key support zone for a drive down towards 12,200, 12,400. Again, scenario where heading towards the end of the month, everyone's starting to make all different assumptions, start to get some recovery, and all of a sudden that recovery fails. That's kind of the focus, the ideal scenario here for both of these. So I know you said you were looking for the DJI. It's the ugliest of the pair. I still think that's the case, Ty. Here's the 4-hour chart. I didn't like it yesterday. I don't like it today. And in fact, the warning I told you yesterday was exactly how it happened. I told you we were at uptrend support, so I don't know what you do there. You still could get the strike of the 618. Guess what happened? Yesterday, you got the strike of the 618, and then it pulled right back above. Classic chop. So on this one, you know, you could get coverage. You could fill the gap even. You could move back towards 34,700. It's the same thing though. It's the same thing though. In my humble opinion, Ty, I think you could still wash out lower. I think even the recovery that you get in equities is a fadeable opportunity. But Dow is the ugliest of the lot. Here's what it looks like on the weekly chart. It's still within the, you know, we still haven't broken any major levels. You know, that's why for me, the SPX is much more appealing. The NDX is much more appealing. For the Dow, you haven't even really broken major uptrend support yet. So it may be the laggard, but again, 30 companies, I just don't put too much stock into it. You know what I mean? Made a fortune on the SPL and killed it in DJI. Well, good for you, Ty. I love hearing those good stories, man. Well done. Remind me, Ty, are you playing that through options? Are you playing that through spot futures? How are you involved in those markets? There's a game to be played on both. Was killed in DJI in the CFD market. Okay, all right, very liquid, very simple. Okay, so DJI didn't do well. You're saying? Yeah, it's one of the. It saw the smallest return. He's saying yes. I hear you, Ty, and I don't blame you. And this is why, man, I try to steer you away from it. I know you love looking at it. You need to know where the fruits of your labor are going to be most beneficial. You know what I mean? For something like the DJI, we've been talking about this, Ty. It's not the cleanest. I just wanted one shot before the big fall. I hear you, but FOMO is deadly in this market. And we got to trade what we see. We got to trade what we see. One contractor. Okay, I don't think you're going to be necessarily wrong. I don't want to steer you away from any positions that you're looking to take, but from the technical clarity, the breakdown just, it wasn't as apparent as it was in what we were looking at with the SPX or the DJI. So, or NASDAQ rather. All right, so we'll leave those there. The equity block could see some more upside, could see some more swings. I think ultimately that's, you know, another favorable opportunity. I got to run here soon, so let me just run through a couple other things I just wanted to touch on. Bitcoin, guys, this is the make or break. We made an outside day reversal yesterday off of not only Fibonacci support, but essentially the monthly range lows. That was 38,788. We never got a close below it. You're seeing obvious divergence with price making a lower low, real subtle, and the oscillator not making a lower low. Remember, the closer those divergence points are to 50, actually the stronger the signal, right? We don't want divergence points up here and divergence points down here. These ones that are within the realm of 60-40 tend to be good. So for Bitcoin, all I want to say is, for any of you who are watching this, this is kind of the make or break. 38,788 needs to hold. The August low at 37.3, this is just a soft target, guys. This is just a soft target. If this gives out, you know, we're talking 35s, we're talking possibly 32. So keep an eye on this over the next couple of days. I think we'll get some more definitive price action for Bitcoin. So I just wanted to touch base on that. And your question on crude is looking like, whoop, wrong charts. Is looking like this. Man, yeah, this is going to be a chop consolidation. Remember the conversation we had about this tie? I think you asked about this yesterday. Man, it's not my cup of tea. It's not my cup of tea. Here's the near-term chart I showed you. Looks like that's that low. Oh man, we nailed it yesterday. 95.48. Woo. Damn, maybe I should be paying attention to this, huh? So that low held to the pip. Here's the recovery. Right into 100, 99.90 is going to be resistance here. Your weekly open comes in just higher. Maybe if you get the break of the weekly opening range, it's a recovery trade towards 107. But yeah, it's just not my cup of tea playing within the week, within the monthly range like this. It's just, I just feel like you're kind of trying to force the move. Oh, the 38.2 is there as well. Keep your eye on that. Long-term position trade. Okay, yeah, Ty, long-term. I mean, you know where I stand on crude. I don't think there's anything that's gonna necessarily alter the trajectory of the long-term play, especially when you look at this on the weekly charts. I mean, even if we correct, like I said yesterday, even if you correct to 88, you're still in the uptrend. So, you know, we'll leave that one there. All right, so that's everything that I see except for Marchin's wild take. So let me just take a stab at these for you, Marchin, in the order you put them. Euro, Aussie. Let's see what's going on over here. Okay, it's the weekly. Again, I'm going on the fly here. These are not trades that I'm actively tracking, but I'm always down for a challenge. So Euro, Aussie. Here's your monthly open. Looks like you just broke the monthly opening range highs and monthly open resistance. Resistance, Marchin. You see that? You see that 38.2? Just caught the high. Oh shit, excuse me. All right, you see that? Okay, let's do some further measurements here. Just see if anything significant has been achieved with that move. 1618, a little bit higher, a little nestled region of resistance there. And the retracement of the immediate move they made to give you some kickback on the pullback. Oof, puts that there. All right. What is this 152 level? Let's take a look-see, shall we? 152.70s. Okay, so former swing highs, former swing lows, 2017, 2018 pivot. I'd keep it there as reference. This is what I'd be looking at, Marcin. Interesting setup. Do you post Twitter updates to SB? What's the best way to see Jamie's work? Jamie's work is all highlighted, Ty, on the long-term trading page on SB, and mine is always going to be on the intraday page. So Jamie's strategies, longer-term swing, intraday charts, my setups. All the charts are right there. We do keep SB Squawk really clean for just trade updates and really, really important stuff. I tweet that on my handle at MB4X. Jamie tweets on his handle as well. We'll retweet what we see necessary or if something's really apparent that we want to push through to the client base, but follow all three of those Twitter handles. Yeah, you should be on those already, Ty. Okay, so for Sterling, Euro Oz, Marcin, interesting setup. The pullback is coming off of a very nice pivot in price and a nice measured move. On this stretch lower, I'd be looking for support off one of these two levels, 146.87, 147.75. If this is going to hold. If this is going to hold. Now, thinking about this trade, just kind of like looking at it kind of objectively, Marcin, you're kind of banking on Euro strength to kind of start to come into command here to stop this pullback. And Aussie weakness is going to be the stretch higher, which, you know, we've kind of already stretched pretty low in Aussie, right? We're coming off support. So I always tell you guys not to get too into the weeds of trying to get indeterminate on each currency of itself, but that's what kind of makes me uncomfortable, I want to say. But from a technical standpoint, I'd be looking for support ahead of 46.90, 46.87 right here. All right, hope that helps. You got an outside reversal candle here right into that resistance level. Does shift the focus lower. I think you looked for a low over the next day or so here in Euro Oz. Okay, the next one, let me see how many I can get through for you here, Marcin. Euro CAD and Euro Swiss. So Euro CAD, I know we've looked at that before. Looks like it's making some sort of bottoming formation. Yeah, there's nothing here for me, Marcin, not on EuroCAD. It's a clear-cut play. Listen, anything you do is against the low. I don't think it's prudent to try to catch this low, but I don't have a strong opinion here in either direction, to be quite honest with you, on EuroCAD. Euro Swiss is going to be the same. I think I even took that off my list here. Yeah, they're seeing sizable moves, but you're playing the biggest, the biggest loser of the two. Now, this one does have an outside reversal candle that manifested yesterday, so I'll give you credit on this one, Marcin. That's inherently bearish right off the highs in the start of the week. You're right back into monthly open support at this point. Yeah, and it's like range. So I wouldn't want to make any major assumptions on this. Play it to the range lows. Parity seems like where it wants to go or what it wants to hold. But again, let me take a step back. Here's dollar Swiss. I had a couple of people asking about this in the webinar, which I didn't address yesterday, but that's because we're just at resistance at a pivot in price, and that's it. I don't have any meaningful slope. The advance has been radical, okay? And then for the last 3 days now, 95.90 is holding, or basically, whatever, the 9600 is holding. So what do? Are you going to start shorting the dollar, right? Or are you going to start buying at the high at resistance? So just because you have a level at resistance, guys, or a level at support, and you have conviction of it, it doesn't necessarily prompt the trade. There needs to be more. And if I look this in the 4-hour chart, we could still grind into some divergence higher still. Here's divergence all since last week. If you ran off that signal, you're holding a short, you might not be that underwater, but it's still trying to, it could still do that whiplash, you know what I'm saying? Feed 96.40, then come right back, and then we're screwed again. So a trade I am watching with detail, but hasn't necessarily panned out. All things held constant, you're just panning out a weekly opening range right below the April low. So maybe that gives us the break. Even if it breaks higher, again, I would be looking to fade that position. It's a very mature trade, very mature trade. So the Swiss at resistance versus the dollar, it's kind of what puts all the Swissy crosses for me like, well, I'd like to play the Swiss pullback, but you're going to play it against Aussie, which is already down. You're going to play it versus Euro, which is already down. It's tough. It's tough. But with that, I think I've hit everything on the list. And if you have any other questions, guys, do feel free to throw them on the message board. Otherwise, we'll wrap it up here. Listen, lay in the load. If you're in positions, again, like I said, with the dollar, fade. This is where you want to take some off, clean up your desk, because if you get, liquidity starts to clear towards the end of the week, you've got US core inflation on Friday, right into the close of the month. It's been a volatile month, so we can expect some position jamming right as we get into the close. Use that caution. Okay, use that caution as we get towards the end of the week. Best of luck trading, everyone. Great to see you guys as always, and I will see you right back here on Thursday morning. Have a great week. Cheers.